Hello guys and welcome again to my channel. It's morning. So before I go to my office, let's finish the preparation of the financial statements. And if you have remembered, we have talked about preparing for the four financial statements. We talked about the disclosures. We talked about the statement of comprehensive income as the first financial statement that you have to prepare. We've talked about the statement of changes in capital or equity, and we've talked about the statement of financial position, right? So, in this particular episode, I'm going to teach you how to make a basic cash flow statement, okay? So, cash flow statement, before we start um, doing the cash flow statement, let me tell you that the cash flow statement is the ones that will explain why is your cash balance ending is just like that. Like for example, in our particular comprehensive example, Baby J company, we have here the T account. I guess this is familiar because I have made this in the past episodes. So our cash balance ending is 117,950. Okay? Of course, there are a lot of explanations right here, but to formalize this, we have to make a cash flow statement. Okay? So, why is this our balance of cash 117,950? So, that's the question that is answered only by the cash flow statement. Okay? Now, second, your cash flow statement is actually your money tracker. So, if you look at the cash flow statement, you'll be able to have an idea where did the cash come from if we're talking about inflows. Where does the money go or the cash go if we talk about outflows. Okay? So basically, cash flow statements states that there are three sources of cash inflows. We have operating, investing, and financing. Okay? So those are the sources of cash inflows. So let's put right here operating activities, investing activities, and financing activities. And actually, guys, if we talk about cash outflows also, those are also the reasons why is there a cash outflow. Sometimes there is a cash outflow because you are doing it because of your operations or normal day-to-day operations. Okay? And we have investing activities. Um, there might be a cash outflow because you invested that is not really under what do we call this? Investments are not really under your day-to-day operations. Okay? Or financing activity, there might be a cash outflow. It is because you have availed a financing, like availing a debt or getting money from your owners. Okay, so you have to pay afterwards after getting those money because those money you used for financing is not yours. So you have to pay it after, and you have to pay also pluses like interests and dividends. Okay? So something like that. So that is why cash flow statement are considered money trackers because it gives you an idea where did the cash inflow come from and where does the money go. Okay? So let's talk about what is this operating activities. So these are activities related to the day-to-day operations of the business. Like for example, if your business is a fast food chain, so the operations is related to the fast food chain business, like selling of fast food. Okay, and for example, you are selling fried chicken. So if the customer pays for the fried chicken, that's a cash inflow under operating activities. Okay? And if you are going to buy chicken, because what are you going to sell if you're not going to buy, right? So if you're gonna buy some chicken and other ingredients, there will be a cash outflow. So that cash outflow is related to operating activities also. It's as simple as that. Okay? So normally, the operating activities is related to your current assets. Okay? So your current assets like accounts receivable, anything like that. Like for example, if you have collected accounts receivable from your customers, that's an operating activity. Okay? Cash inflow from operating activities. Okay? So again, operating activities is related to your day-to-day operations or normal course of business of the company. Okay? So any cash inflow from that is will be under this cash inflow operating activities, and any outflow because of your day-to-day operations will be here also in the operating activity section. Okay? Now let's talk about investing. So investing activities are normally those investments that you are doing as a company. For example, the company is now really big, and that the cash reserves of the company is very big also. So you have to invest it in other things if ever in the operations it's enough. The cash is much more than what's needed in the operations. Like it's very big. Like for example, you have a cash reserve of 10 million and that your operations only need 5 million. So there's an excess of 5 million. So you have to invest it. So what are these investing activities? Like for example, when you loan the excess 5 million to a company and you are not a bank, okay? You're a fast food company. So your operating activities is fast food related. Okay? So if you loan it to someone, that's already an investing activity because that is not your normal course of business unless you are a bank. Okay? Because if you are loaning money to someone and you are a bank, of course, uh, that would be a cash outflow because you have loaned it to someone under operating activities, because the normal course of business of banks is borrowing and letting the people um, borrow it from you, right? You borrow from people and you let the other people borrow it, something like that, right? So, or you're a lending company, of course, that's your normal course of business. It will be in the operating activities. And I hope that the distinction is clear. Okay? On the investing activities, it's not related to the operations, but you are investing in order to earn more. Okay? Even if it's not related in the operations. And normally, these investing activities is tied up with your non-current assets. Like when you purchase land, when you purchase building, those are considered as investing activities. That is why I have a definition for investing activities. Number one, it's buying and acquiring non-current assets like land, like building, like equipment, something like that. And of course, lending to someone, it's not in the ordinary course of business, or buying of shares, those are investing activities. And I am thinking always that under investing activities, normally the people or the companies that are doing this are the ones with excess cash. Okay? So that's it for investing activities. How about financing activities? Financing activities is borrowing money from a third party, like borrowing from banks, or else letting your owners uh, invest in you. You understand? So that's actually financing is related to sourcing of funds, getting funds from third parties and getting funds from your owners. That's what I think. Okay? So that's my simple definition. So not so technical, right? So on the financing activities and investing activities, I always think that these two are the opposite as to each other. It is because in here, you have lots of money to invest more than what is needed in the operating activities. You have lots of money, so you tend to have a cash outflow first. But then again, if you are going to invest it, of course, you'll be able to get the principal plus the interest and etc. So cash outflow first for the investing activities. But later on, there will be cash inflows. In the financing activities, it's different. It's the contrast. Because you will have a cash inflow first. But later on, you are to pay the principal plus the interest and the dividends. Okay? So, that's how I characterize this one. So, meaning, what I'm trying to tell you is that if the cash balance, for example, cash beginning is 1 million, and then it became, and the cash ending 3 million, it does not necessarily mean that the company is doing well. It is because maybe that 1 million became 3 million, it is because you have borrowed money from others. So it's very important to know where did the cash come from and where does the money go. Okay? And where can you see that? It's on the cash flow statement. Okay? And since you have the basic definitions of these three, let's make a cash flow statement based on our illustrative problem. Now, I have made this so that I can economize the board. Because if I'm going to um, make this in front of you on live on the recording, this will not fit. Okay? So, I have made this. So again, you're already familiar with the T account for cash. So based on that, you'll have details already. There are explanations as to why there is a debit 100, debit 80, debit 40,000, and we have credits here or cash outflows. But it is not yet segregated into operating, investing, and financing. So let's segregate it, okay? So this is your cash flow statement, guys. So we have Baby G Company because you will still have a heading. Yep. And then cash flow statement for the period ended. And as I've said, it would be better if there is a logo of the company. Okay? So that the heading will be complete. Now, what's the first part? Of course, we have the operating activity section. So, we'll start with operating activities inflows. Start with inflows. Inflows dash operations. Yeah. So, we're gonna get the transactions that is related from operations. Like for example, if we talk about operations, we're gonna focus on the debits. Okay? So, which of these three or which among these three are considered part of the operations? Of course, the 100,000 will not be part of the operating activities because that is an investment from the owner. So that's part of the financing activities. Let's put here F. We have advance payments from customers. So that is an example of inflows from customers. So in the cash flow statement, since we are looking for money, we do not care if ever we did earn this. Because if we talk about advance payments from customers, that is unearned yet, right? So the earning and the not earning portion plays an important role in the income statement. But on the cash flow statement, we do not care about that. We stick to inflows of cash and outflows of cash. Okay? So we are on cash basis right here. Okay? So that advance payments from customers, we're going to claim it as inflow from operations. So we can put it as cash received from customers. So that is 80,000. Okay? So the other one, the 40,000, is also related to operations. And that is a cash received from customers for services already rendered. Again, we do not care. If ever this is earned, this is not. Okay? Those are all cash received from customers. And actually, you can merge them. You can put here the composition, 80,000 plus the 40,000. So you can put right here, 120. Okay? So that's cash flow from operations. It's as easy as that. And then afterwards, you will go to the outflow related to operations. During this time, you're gonna focus on the credit side of the cash. So first, we have payment for business permits, payment of advance rent, down payment for supplies purchased. These are all operating activities. Okay? How about, so this again are all operating activities. So next, purchase of office equipment for cash. As I have mentioned, if you are going to purchase for non-current assets, that's part of investing. And then, payment for utilities. Of course, payment for utilities is related to operations. Actually, you're gonna pay some electricity, water, and etc. because of operations. And of course, this owner's drawings for personal use is financing, something like that. So the classification of the outflows and the inflows is very important in making the cash flow statement. And what I'm trying to teach you now is the basic wherein you just go to the ledger of the cash, you segregate it into operating, investing, financing, both the inflows and the outflows, and make the cash flow statement. Okay? So that is much better in the actual practice. But there are some shortcuts in cash flow statements, like the advanced course on cash flow statement. We have the direct method and the indirect method, and you will know that in the higher accounting already. Okay? We're gonna discuss that also in this particular playlist, but further ahead. Okay? Right now, let's have the basic. Okay? Now, let's have the outflow from operations. Of course, you can put right here, cash paid for business permits. Yeah. So you can indent. This is 120 right here. You have the cash paid for business permits worth 2,300. Okay. And then we have cash paid for advance rent, which is 15,000. And then down payment for supplies. So cash paid as DP, down payment for purchase of supplies. That's 10,000. And we have cash paid for utilities, which is 19,750. So that's it. Those are all from operations. Now, let's calculate how much is that. Okay? So, I'm here with, since I don't have anyone to calculate for me, I'm gonna calculate it. We have 2, 3, right? Plus 15,000 plus 10,000 plus 19,750. Okay. That's 47,050. So you can put it right here, 47,050. So you will be very glad. It's because minus 120 minus that cash outflow. So your operations have given you positive 72,950. That's the net cash flow from operations. And that's pretty good because if ever you'll be able to see that the business is performing. Okay? You understand? So aside from actually using the income statement as a measurement of the operations of the business, according to Charles Schwab, through the income. Oh my God, what happened? So again, aside from looking at the income statement to look for the performance or get information about the performance of the business, you can also look at the operating activity section of the cash flow statement. And if it becomes like this, then the business is doing good. It's positive here, and it's also positive in the income, then the business is doing good. Because sometimes, even if there is a profit on the income statement, actually the business is cash poor. Like for example, most of the revenues of the company is on account, meaning the customers are not paying. Okay? So you have already given your services or goods. So you have a lot of accounts receivable. You have a lot of income actually because that will be considered as revenues according to accrual concept, right? So it will result mostly to a positive net income because you have a lot of revenues although there's no cash. Okay? So you might be misled that the company is doing well if you just consider the income statement. Okay? Because under the cash flow from operations, if we're going to assume that particular example, it might be that your cash flow from operating activities will result to net cash flow from operation that is negative. Because again, you have a revenue, but your customers are not paying, something like that. So, in order to complete the whole picture about the performance of the business, you need to look at the income statement and you also need to look at the operating activity section of your cash flow statement. You understand? Does it make sense? It does, right? Now, let's have the investing activities section. Investing activity section. The format is the same. You just have to focus first on the inflows. And since we don't have any inflows, we can put right here zero immediately. There's no investing that's in the inflows, right? But we have outflows. So what is our outflow? It's only one, purchase of office equipment. Purchase of equipment, 30,000. Yeah. No. Yep, that's it. So what will happen is you will have a net cash inflow for positive. If that is outflow, you'll have an open and close parenthesis of 30,000. That's it for the investing activity section. And you have the financing activities section. So there is two transactions related to financing. So the first one is an inflow, investment from the owner. So investment from the owner is 100,000. So that's an inflow. You have to put it right here. And you have withdrawal as an outflow. Outflow. Uh, Drawings by the owner. The drawings by the owner is 25,000. So meaning, you will have a net cash inflow or outflow. But in this case, we have 75,000 positive, so that's an inflow. And lastly, in that particular format, you have to remember to add the cash beginning. So the cash beginning is the cash ending last year. So since we don't have any cash beginning yet because the BBG company is just starting, so we put there 0. And we will have the cash ending balance already. I'm sorry, I did not predict that it's longer. Cash ending. So the cash ending is just the net cash flow from operating activities, which is 72,950. 72,950 plus for minus 30,000. Let's add first the 75 plus 75 for the financing, and then you minus 30,000 for the investing activity section, and there we go. We have 117,950. So that's cash flow statement. Again, the cash flow statement is your money tracker, which answers where did the cash come from and where did the money go. And there are only 3 activities that could answer that. Maybe the cash inflow and outflow, it's because of operating activities, in which the operating activities is related to the normal day-to-day business of the company or ordinary course of business of the company. Or the inflows and outflows might come from the investing activities, wherein these are investments not related to operations, and you're expecting to get a return aside from getting the principal that you have invested. And of course, the purchase of non-current assets is part of the investing activities section. Or the money might come from financing, borrowed funds from owners, from third parties, and you're expected in the future to pay for the principal plus a premium like interest and dividends. So before I end this video, I would like to emphasize that in the standard, there is an accounting standard for cash flow statement. If ever you are going to pay for interest or interest paid, that is part of the operations. Okay? And supposedly, the interest paid should be on the financing, right? So, in the practice, you can use either operating or financing for the interest paid. And for the dividends paid, of course, that is only on the financing activities section. So, when it comes also to investing, so meaning you're the ones who lent the money. So, if you have cash received as interest, okay, cash received from interest, that is also in the operating activity section. But in practice, alternatively, you can put it in the operating activity section or the investing activity section. Okay? So, either or, but there is an option of putting that on the operating activities. And normally, when solving for problems, it's under the operating activities. Okay? And also, if in the investing activity section, you have, what do you call this? You have bought some shares. So, of course, you're expecting some cash received from dividends, right? So if that happens, that will be on the operating activity section or investing alternatively. So meaning, the interest paid, the interest received, and the dividend received can be put on the operating activity section. But it can also be put here on the investing activities and financing alternatively. But when solving, it's always on the operating activity section. So there are four. Again, the three are the cash received from interest, dividends received, as well as the interest paid. That is usually under the operating activities when solving for problems. Okay? But the standard says it can be alternatively recognized not just in the operating activities but on the investing and financing also. The dividends paid is always at the financing activity section. So that's it for this video. That's it for cash flow statement as your money tracker. See you on my next episode.